Hi, I'm Kara Murphy, and this is Money with Murphy. Let's look back at 2024 and what to watch in 2025. The S&P 500 last year had a stellar year, finishing up 24%, marking back-to-back years of over 20% gains. In the fourth quarter, the index rose just over 2%. So what drove this performance? Large growth stocks led the way, up an impressive 33% for the year and 7% for the quarter. Meanwhile, small cap stocks and value stocks lagged, gaining less than half that. Sector-wise, communication services soared 40%, with tech close behind at 36%. On the flip side, the materials sector was the only sector to end the year in the red, losing nearly 13% in the fourth quarter alone. And of course, we can't forget the Magnificent Seven. Collectively, they rose 60% in 2024 and accounted for a big chunk of the market's gains. NVIDIA, the darling of the market since 2023, finished up over 170%. Interestingly, despite gains earlier in the year, Santa Claus did not come to town for the market. The S&P lost 2.5% in December, with weak market breadth and most sectors flat or down. Sentiment soured after the Federal Reserve signaled fewer rate cuts ahead, while some investors took profits after a strong post-election rally. So what about earnings? Once fourth quarter earnings are tallied, S&P 500 companies are expected to grow earnings in 2024 by 12%, which would be the highest year-over-year growth rate in 3 years. The largest boost is expected to be in financials, with earnings climbing almost 40% year-over-year. Strength is also expected in the communication services and technology sectors, with growth rates of 21% and 14% respectively. While large and mega-cap names have dominated earnings growth for the last few years, analysts expect that this year, smaller companies will start to take the lead, beginning in the second quarter of the year. As strong as last year was for stocks, it was more of a mixed bag for bonds. High-yield bonds were a standout, up 8% for the year, and short-duration treasuries also performed well, with 3-month treasury notes up over 5%. Long-term treasuries lagged, with the 10-year note down 1.7% as its yield climbed from 3.9% to 4.6%, despite the Fed cutting short-term interest rates. Yields on long-term bonds generally rose, driven by persistent inflation, strong GDP growth, increased government spending, and potential tax cuts and tariffs. Coming in even stronger than stocks were gold and Bitcoin. Gold rose 26%, setting 40 all-time highs, thanks to central bank buying and geopolitical uncertainty. Not to be outdone, Bitcoin gained 120%, with half of those gains coming after the election amid hopes for a more crypto-friendly administration. Oil, however, ended the year down nearly 13% despite Middle East conflicts and production cuts due to softening demand. Looking ahead, several macro trends could shape the markets. Investors will be focused on the new administration's approach to tariffs and tax rates, the Federal Reserve's approach to interest rates, and geopolitical uncertainty. We'll continue to update as the year progresses. And as always, invest wisely and live richly.